Hello, everybody. My name is Nicole Elliott, and I'm a technical analyst and private investor. And today I thought I'd talk commodities because it's something that just hasn't been on my radar for quite a few weeks, really. And I really object when people lump them all together. I mean, this is a massive, very disparate group. This is not a thundering herd. So today I'm going to look at base metals, one base metal, one industrial product, and one agricultural product. So my first chart is the price of aluminium. And by the way, all my charts this week are weekly ones. So I thought we'd kick off with the price of aluminium. But what's interesting here is that the aluminium futures market is now dominated by Shanghai. I mean, they've been going for a long time, since about 1994. They've completely overtaken not just the use and purchase of aluminium, but the trading of the futures itself. So it's priced as yuan per metric ton. As you can see, we've had a real true V-shaped recovery between the first quarter and the second quarter of this year. But it does happen to come from some of the lowest ever levels in the last quarter of a century. So in a way, you'd expect the bounce back to be good when you're starting from dirt cheap, which is the case here. We have recovered sort of to the halfway mark between the 2017 high and this year's low. I think this one is time to take a breather. It's not the end of the world. It's not going to go all the way down again. It's not going to plow on forever and ever. But it is very bought on the relative strength index. Bullish momentum is waning. So I think we're going to settle into a sort of sideways period between 13,600 and 14,800 yuan. This is not the time to give up. This is the time to make sensible investment and trading decisions. My second chart is something called random length lumber, and it's traded in Chicago. The price is US dollars per 1,000 board feet. These are random lengths of lumber. They're not all standardized. And you can see that it dropped to $250 in April. And then this month hit 711. I mean, that's almost tripled in price. Again, from a low level, but now we are at a new record high, 3 times where it was just a few months ago. The volume has been terrible on this rally, really low, really poor. Open interest has been moderate to modest, shall we say. So again, this is not a broadly based rally. The volatility is already off the record highs, but that's partly because we've been moving in the same direction for almost 9 consecutive weeks. Be careful. Remember the rule of 8 to 10. The move is mature. My third and final chart is that of live cattle. Now, this one too has rallied from a low of 80 cents per pound, some of the lowest in 15 years. And it's got back inside a sort of broad band that has held since 2017. It's roughly between 100 and 130 cents per pound. I think this one still has room to the upside, i.e. I think we could easily get up to 130, 125, something like that. So you still have another 25% potential upside here. The MACD and the momentum are still bullish, pardon the pun. So here we go. We like our cattle at the moment. I hope to see you next week. Take care.